Welcome everyone. In this video, Xcn coin breakthrough has arrived. We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. One of the key technical structures we emphasized in the previous video, the flag pattern, has finally been broken to the upside, marking a highly critical signal from a technical analysis perspective. In technical terms, a flag formation typically develops during a consolidation phase following a strong upward price move, and often continues in the same direction as the flagpole. The horizontal or slightly downward sloping structure that makes up the flag represents a temporary balance between short-term profit-taking and neutral buying-selling pressure. Now, turning back to the chart, it is clearly visible that this consolidation structure, the flag, has concluded with a bullish breakout. This breakout indicates that the price has resumed its upward trajectory and may have just initiated a new wave of upside momentum. The fact that price reacted sharply to the breakout further confirms the strength of this technical setup. Such breakouts are often accompanied by growing confidence among market participants, leading to aggressive buying behavior. This breakout is not only significant from a technical standpoint, but also represents a major psychological shift. The resistance zone of a flag pattern is often seen by investors as a waiting line, a level that must be cleared before entering with conviction. As soon as price breaks above this zone, the market dynamic changes and fresh waves of buying can emerge. This upward breakout helps eliminate hesitation and builds confidence among traders. For bullish market participants, this becomes a signal and an opportunity to join the trend. Moreover, the technical target of the formation suggests that this move might only be in its early stages. In most flag patterns, the price target is calculated by projecting the height of the flagpole upward from the breakout point. In this scenario, it's likely that the price has just begun its upward journey, and the breakout may be just the first step of a larger move. When such breakouts are also accompanied by rising volume, it further increases the likelihood of a sustainable and healthy rally. If there was a noticeable increase in volume at the moment of the breakout or shortly after, this adds additional confirmation of strength behind the move. In conclusion, the flag pattern that we previously identified and closely monitored has now officially broken to the upside. The subsequent price action shows that the pattern is playing out as expected, and a journey toward the projected technical targets has begun. Of course, minor pullbacks can occur during such upward moves, but as long as the overall structure remains intact, the continuation of bullish momentum remains very likely. Therefore, in the coming days, an acceleration of this rally and a move toward the flag's full target appears to be a reasonable and strong scenario. That said, we must remember that relying solely on the flag pattern is not enough. Other metrics and indicators should also be taken into account to complete a well-rounded analysis. Keep watching closely. When we look at the chart from a broader perspective, it's clear that the current price level is strategically significant and must be monitored closely. This zone represents what is known in technical analysis as a bullish order block, a key area where, historically, price has encountered strong buying interest and where buyers have become increasingly active. Every time price has approached this level in the past, it has reacted with a noticeable upward move. This tells us that this is not just a typical support zone, but also a foundation where deep market orders and institutional capital are actively at play. Such bullish order blocks are especially valuable for traders who follow smart money concepts. That's because every time price has tested or neared this zone, buyers have stepped in aggressively to defend it, preventing any deeper sell-offs. These zones are not only technically strong, but also psychologically significant. In the minds of many traders, this is where price tends to hold or reverse. So if price revisits this area, there's a high probability that strong buying pressure will once again emerge. Here's the critical point. Price hasn't just touched this zone once, but multiple times, and each time we've seen a similar reaction to the upside. These repeated responses clearly confirm the consistency and strength of demand within this area. Traders who took positions on each dip into this zone have effectively turned it into a kind of price floor. In that sense, this area has evolved into a very strong zone, both technically and behaviorally. What's more, this bullish order block is relevant not just for short-term trades, but also for medium and long-term investment decisions. Many institutional investors prefer to add to their positions during such pullbacks. So, any potential retracement into this zone could be viewed by professional investors as a buying opportunity. This adds further weight to the idea that, if price tests this level once again, there's a strong chance we could see a sharp upward move from there. Structures like these are not limited to static technical levels. They also help us understand institutional intent, market dynamics, and the sustainability of buying pressure. Therefore, This bullish order block serves not only as a retrospective point of analysis, but also as a forward-looking signal for potential price action. To summarize, the current level we're observing is a previously tested bullish order block, where buyers have clearly stepped in before. This area could very well act as the launching point for another upward move. If price revisits this zone, it's highly likely that buyers will respond with the same level of strength, potentially pushing price higher once again. However, it's important to remember that even the strongest order blocks can eventually break down after too many retests. So caution and confirmation are key. When we take a closer look at the MACD indicator, it's evident that some highly noteworthy and technically significant developments are unfolding. These signals hold considerable importance not only for short-term traders, but also for those conducting medium and long-term analysis. The MACD provides valuable insight into price momentum while also serving as a reliable indicator for potential trend reversals. In our latest chart, we can clearly observe the early signs of such a shift forming on the MACD. First and foremost, we see that the MACD lines have recently made a bullish crossover. In technical analysis, this is considered a critical signal, as it often suggests that the price may be exiting a downtrend and entering a new upward phase. This crossover becomes even more significant if it occurs just below or directly at the zero line, as it indicates that momentum is beginning to shift to the upside and that the market is leaning toward a more bullish stance. Another key observation is that the MACD lines are starting to diverge upward after the crossover. The widening gap between the MACD and signal lines suggests strengthening bullish momentum. As these lines move further apart, confidence in the uptrend grows among market participants. This also reflects a psychological shift where traders start to gain trust in the upward movement, buyers become more assertive, and trading volumes often increase. Additionally, the fact that this bullish movement is occurring simultaneously with the MACD crossing above the zero line adds further confirmation. In MACD analysis, the zero line acts like a neutral threshold. Values below it generally indicate negative momentum, while values above suggest positive momentum. In the current setup, this threshold has now been breached to the upside. This signals that the underlying strength behind the price movement is gaining traction and that the market's desire to push higher is increasing. In scenarios like this, combining MACD signals with price action, such as support/resistance levels, trendline breaks, or pattern confirmations, can provide even more powerful insights. For instance, if the price is breaking out of a resistance zone or moving within a rising channel at the same time, the MACD shows a bullish crossover and rises above the zero line. These multiple signals together strongly reinforce the potential for further upward movement. It's also important to remember that MACD does more than simply show directional movement based on historical data. It also measures the strength or momentum of that movement. This is one of the key features that sets MACD apart from simple moving averages. It doesn't just tell us whether the price is rising or falling, but also how strongly it's doing so. That's why positive developments on the MACD, like the ones we're currently seeing, are incredibly valuable in assessing where the market may be headed in the near term. In conclusion, the combination of bullish signals we're seeing on the MACD, such as the upward crossover, the move above the zero line, expanding histograms, and increasing distance between the lines, suggests a significantly increased probability that price could continue climbing from current levels. If these MACD signals remain aligned with price action and are supported by growing volume, we could very well be on the verge of a much stronger bullish move in the days ahead. Yes, friends? I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.